Okay, we're live. Testing, 1, 2. Testing, 1, 2. Okay, we're good to go. Welcome to the podcast, guys.
Welcome, everybody.
Hello.
Can you guys hear me?
We got you, man.
Okay. Welcome to the Next Level of Business podcast. This is Josh Pather here. We have Shane Mara and we have Mr. Sheldon in the building. Shane, why don't you introduce our guest for us?
I will. I've got Mr. Sheldon Anderson in the house today. I appreciate you being with us today. It's my honor, my privilege. I got to tell you, in the banking world, if you're in it for any length of time, you're going to have these really good customers, and you can have this top 10 list. And in the banking world, your top 10 list is going to be 80 to 90% of the revenue that you generate for the bank. And the bank's going to love them. You're going to love them. And you're going to build this bond together if you do a good job on the relationship side. And so this was one of my favorite guys right here. And we met early on. When did you start your first one?
I think that my first store was in 2002, but we probably met somewhere around 2007 or.
Yeah. So I started around that time, and he was one of the very first customers that I met, and he's got a gold and jewelry business. And you want to give your name and your intro and whatnot?
Yes. I'm Sheldon Anderson, and I own a couple gold and silvers in Dallas, Fort Worth. The first one was Richardson Gold and Silver over at 75 and Beltline Road. And the second store was Frisco Gold and Silver at Preston and 121, followed by Bedford Gold and Silver, which is where Shane and I met.
Yeah, he was right just a couple doors down from the bank.
Yeah, on the service road of 183.
Yep.
In Bedford. And fourth store, Royal Gold and Silver at Royal Lane and I-35 in Dallas.
Yeah, so, what's cool is Josh got this young entrepreneur story. I didn't necessarily, mine was opposite of that, and I've shared that story, but you had a young entrepreneur story too. Won't you go into some of that?
So, I mean, as a kid, I grew up in the family business. We had an Army Navy store, and we sold jeans. Most of our Army Navy stuff we got from Army auctions and military bases, Goodwills, anywhere we could buy the stuff inexpensive. A lot of times it was in bales and you were buying it by the pound. At Army auctions, obviously you would just bid on loads and loads of drywall boxes of miscellaneous gear and equipment and clothing. So those were my experiences as a youngster, mainly starting in elementary school through high school.
And it was with your dad, right? Family business.
Family business.
And did you see things did you like that industry, the Army Navy business? Like, what made you gravitate towards gold and silver?
So my mother's side of the family had jewelry store / pawn shops in South Florida, down in Fort Lauderdale. And my mother had gone to GIA, was a graduate gemologist.
Your mother was?
My mother was.
That's cool.
So there was some family history in that industry, kind of more pawn shop industry. And when I would go down as a kid to Florida, I would go to my uncle's pawn shop and help out. So I think that there was definitely some influence in that area where I saw the gold and this and that. When my parents were first married, they were actually on business, although that didn't last very long. And by the time I was 3, we were not in the pawn business anymore. So, but I was too young there to really have much influence.
But what age were you when you got your first store, the one in Richardson?
I was 25 years old.
25. And another guy that didn't go to college, and tell the backstory on that.
Well, I would just say that I always felt that, obviously, growing up in a family business, we basically, when we moved to Texas, I was in first grade. We basically started over from scratch. We'd made some money in the pawn business, but my father lost it, and we were buying jeans and clothing from the Goodwill and selling the clothing at a flea market. The way we happened into the Army Navy business was that this little bit of military surplus that we'd get in these bales of clothing seemed to sell pretty good. And that's what actually propelled us into the Army surplus business. But before that, it was mainly jeans and denim. And so we started a flea market, and we were selling to mostly Hispanic clientele at Traders Village and Canton and different flea markets in the Dallas, Fort Worth, North Texas area.
Yeah, and it's cool. I would say that probably 80% of the guys that were in my top 10 list didn't go to college. And there's definitely a theme here, and the school system, you see Cuban talk about it, and, maybe Gary Vee and all this stuff. There's a flaw in the school system. And the flaw is that they teach you how to be an employee, right? You are trained to get a good education so you get a good paying job. And there's like no classes on being an entrepreneur. And so the entrepreneur thing, it's so much of the time it's a learned craft from family. Like in your instance, it was both sides of the family that taught you that. And Josh, he just had a natural instinct for it and wanted to do it. But there's just a theme there of entrepreneurs not necessarily going to college. And you see Cuban pushing that a lot, Gary Vee pushing that a lot now. And so I think you're going to see a big swing there, in my honest opinion, of college for entrepreneurs in today and going out for the next 20 years.
Well, I think that, personally, I don't have anything against college. And I think that everybody is built differently. And you really have to follow your calling and what you feel is your destiny and your direction in life. And I don't know that there's any specific recipe for that.
Yeah.
That you really have to forge forward and be accountable for whatever decisions you make, good or bad. The biggest thing is structure. And a lot of people lack motivation and structure and need to be told when to get up and what to do and how to do it. And then if they decide that they have some strong direction as to how they could do it better. And, in business, a lot of times, there's niches and everything. And you can take one idea and just sharpen it and be extremely proficient in one small area and be hugely successful.
Yeah. So that leads me to Sheldon. I've always thought this, and everybody at the bank thought this too, that he's a unique cat, and he always, it seems like, has the Midas touch. And everything he touches turns to gold, literally. You're in the business, but it just seems like everything you touch turns out for the best. And I remember one time when I was at your shop, you were, I was talking about, why do you enjoy this business so much? And you pulled out a bag of diamonds and you had it in the palm of your hand. He goes, right there's $1 million of inventory. He goes, I don't have warehouses full of stuff. He goes, my inventory is right here. And it was such a neat thing. But what I love about your business is it's a trading business, right?
Sure.
Like so much, you're buying low and you're selling high. You're not manufacturing anything.
Correct.
You're buying from the people at a low price and you're selling it at a higher price. And you probably did that in the Army Navy situation. And so instead of manufacturing, you develop this trading mindset. And I can tell you, he's got so many cool toys, and everybody loves toys, right? Especially entrepreneurs. We all love toys. And, but you never really lose a bunch of money on your toys because you take that same mentality with your toys into those things that you buy. So you got a nice big boat and you traded on that one, and you got some nice cars and you do all that. Talk about the trading mentality and what it takes to get the right deal, and how you go about doing some of that?
Well, I think a lot of that, my philosophy in that area that you're talking about is that I try to buy value in whatever it is that I buy, especially after you're in the buy-sell business. It's the American way to go and pay retail. And people have become complacent to just go, well, I'm going to buy a car for $40,000 and I know in 3 years it's going to be worth 20. But they have become so regimented in the philosophy that's
like they're almost trained in that.
Yeah, it's just like,
and they bought into that mindset.
Yeah, kind of like that's part of what the schooling is.
Yeah.
It's just that, well, you're going to go and, after high school, go to college, get a job, buy a car. The car's going to be worth half what you pay for it. 3 years later, you're going to trade that in. You're going to constantly.
And you'll always have a payment, right?
Well, the payment is expected, yes, and obviously we're a huge debt society, so everything is revolved around your credit score being good, and it's a perception. A lot of the schooling is, even people that are in college go to internships when here they're in college and they're going working for free for somebody because they're a big name company, so they can put that on their resume. Right. So it'll look good for future. Everything's a little bit backwards in my thinking, but buying high and selling low is something that is definitely the American way.
Exact opposite of what you want to do.
Exact opposite of what anybody should do.
Yeah.
If they're trying to accumulate wealth, and with wealth have some freedom, because if you have a bunch of payments and you owe a bunch of money, there's a lot less freedom to do what you want
100%.
When you want to do it.
Yeah, for sure. Nobody saves. And when you don't save and you accumulate debt, that's the double whammy. And that's why we have so many people that have such a little amount of savings. And a lot of the millionaires next door, they just still don't buy new cars.
Correct. The philosophy of that,
they're just smarter than that.
Saving their way to $1 million.
Yeah.
Yes.
And so I know, and I'll just talk about one toy just in general, so I can give the audience something to sink their teeth into on what we're talking about. So I remember you buying a Bentley a few years back. You bought a few Bentleys.
I've had 3, yeah.
And,
all the same one, and all old. The first one I bought was the newest year model. It was the 05.
And what year was that? Because it wasn't 05. It was used when you bought it, right?
That was when it was around 08 or.
Okay, so you bought a 3-year-old Bentley.
09. It was from a customer.
And just tell me, give me an example. Like, what did you pay for that Bentley at the time?
$64,000.
64. And how long did you keep it?
The dealership had offered him the same amount of money for it, and it was in his garage with a dead battery. He said, "Sheldon, Park Place called and offered $64,000 for the car." He goes, "You can have for exactly the same price as they offered."
Yeah, and what's cool, the dealers always fleece people, right? It's part of a lot of it is they can, but a lot of it is that they have to, right? They have all this.
Sure, they have overhead
and make profit.
Yeah, they have to make money.
If you can get a dealer's price, you're getting a good deal on the car.
Yeah, it was probably worth $75,000.
Yeah, so
$80,000.
Worth 70. You buy it for 65. You keep it how long?
I had it for maybe a year.
Had it for a year, and how much did you sell it for at the end of the year?
I traded in and basically got what I had spent on it back in trade.
So that is the mentality of what we're talking about, guys. So he buys a 3-year-old Bentley for 65. He gets to use it for a year and sells it for the same 65.
Correct.
And that is the trading mindset, and that's something we want you guys to adapt as well, especially on cars. Instead of losing half in 3 years, which is the average, you can lose half on 3 years on a new car. Buy that thing 3 years old, 4 years old, drive it for a short period of time, buy it as a great deal. There's tons of people out there selling cars at good prices. Yeah, especially private individuals. So
absolutely,
that's just one thing to touch on there. But that's the trading mentality, and you do that for pretty much everything in your life, whether it's real estate, whether it's boats, whether it's diamonds, whether it's gold, and it works every time. Correct?
Every time, maybe a little bit, maybe giving me too much credit, but
he's humble.
It consistently works more than it doesn't.
Yeah.
Overall, that philosophy on life is going to pay dividends later. Because if you can buy, if you could buy a $500,000 boat, let's say, and have the boat for 5 years and not lose any money, you may have lost some potential earnings from that $500,000, but you also had the enjoyment of the vessel.
Yeah.
So, but if you buy something really right and see that it has value, and, just as anything, houses, boats, real estate, there are trends where things can be high in value and low in value. So a lot of times it's recognizing the value in the replacement or what it would cost to build. And a lot of times if you have your ear to the ground and you're seeing a trend like that, let's take housing, for example, right now. Lumber's going up, raw materials are going up. You have all of the inflation that's projected because of all the PPP trillions of dollars that have been given away for free. So you can see that the replacement value on houses is going to go higher because the raw material cost is going up. But that price elevation is going to be, maybe in 1 to 2 years. It's not going to happen overnight. So that's going to raise the value of old houses as well, because the replacement value is going to be so much higher for a new one. So in my business, Rolexes, for example, are a great example. A new Rolex two-tone is $10,000. The old two-tone watches, when they were new, they were $4,500. Old two-tone right now is trading for $5,000.
Still what it cost.
Still what it cost 20 years ago.
Wow.
But that value has been elevated by the cost of the new one. Now, Rolex has also done some great things in marketing and other areas that have really propelled their brand to cement the success that they've had for years to come. But yes, there's other elements to that have made that happen. But still, the fact that the cost has gone up so drastically is.
Yeah, that's interesting. I was actually having that conversation yesterday. One of the companies that I do some CFO work for, they sell drilling rigs, and these drilling rigs have a long life. Mm-hmm. You have a drilling rig for 30, 40 years if you take good care of it.
Sure.
And so what that means is, you got a drilling rig that was made 20 years ago is still a good rig, but the prices have gone up so much.
Sure.
Like the drilling rig 20 years ago may have been $250,000. Well, now they're $550,000. So the 20-year rig is still worth almost what it cost 20 years ago.
Sure.
And I was talking to one of the manufacturers of those yesterday, and we were having that same discussion. And that's exactly what you're talking about. But being you always have to have a keen eye and be on the look for this stuff and be ahead of the game. And that's what you always are. And I've always enjoyed watching you from afar and you trade your way, to literally fortunes. And so it's really cool.
Well, I think the more educated you are in anything, the better you can make an informed, logical, smart decision. So whether it's you're buying a car, a lot of times when you're buying a used vehicle or something that's used, you have a track record of if there's flaws, if there's recalls, you can see past performance.
Right.
You're getting a free look at the durability, the wear, everything. So
and all this information is available. Right?
All that information is available.
All you got to do is go look, do some research.
So, for example, although I have some fancy cars, my daily driver is a 02 Lexus LS 430 that has 88,000 miles on it. Now,
18-year-old car.
Yeah, 18-year-old car. Yeah. But that LS 430 was way ahead of its time. The particular one I have was the ultra luxury edition. It's air ride suspension and all the bells and whistles. It was a $13,000 package. I paid $10,500 for the car with 40,000 miles.
How long ago was that?
I've owned 3 of those cars as well. So, but it was a vehicle that's made in Japan. It was ahead of its time as far as the infotainment system,
right,
and the touchscreen integration into all that.
Yeah.
So just probably one of the best V8s ever built. But you look at the reliability on it, it gets, 4.9 out of 5 stars. I mean, so all of these things are,
Right.
we now realize that, they're a 300,000 mile car, and maintenance wise, you're, the likelihood of something going wrong that's catastrophic is very low.
Yeah.
So,
All right. I want to jump into one of the things I'm passionate about is business owners marrying real estate with their business. All the best business owners that I had did that, and they did that well. And it was the evolution of they bought the first one. Everybody has, and it may not even be fear of the first one. It's just the unknown of the first one, right? And there's so much knowledge that you have got to gain, like you're talking about doing your research. A lot of times on real estate, you can only read so much, and you just got to do it.
sure.
And so you got to walk through, all the different phases of it, from the inspection process and doing all your due diligence and the financing and, the title company, all that stuff. But once they did the first one and they ran the numbers behind the scenes, knowing that their business could cash flow the building, or if it was a multi-tenant situation, they knew that the additional tenants would help cover the cost of the note. And so once they got past the first one, though, they saw not necessarily easy, but they saw that it was doable, and they saw the potential of it. And almost all of them, they evolved into multiple pieces of commercial real estate from that point on. And you have done the same. And talk a little bit about how you got the first one, because we all know how we go from 2 to 10, right? Your second building to your 20th building. We all know that. The big question is, how'd you get that first one, and the mentality when you were going into making that first decision? Because that's the one that so many people have a hard time getting over, and getting over that fear, reluctance, trying to figure out how to come up with capital.
So around the time that you met me, I was separating from a brother that I was in business with, and we were both 50-50, which on a side note, I don't recommend 50-50. So the first 2 stores we'd opened in Richardson and Frisco, they were both in strip centers, belonged to a large real estate tenant.
So you had this pretty little lease that you had to guarantee.
I wouldn't say pretty. Leases are designed to either fleece you, run you out of business, or both over a period of time. And most large real estate firms are ruthless.
Can you say that one more time? Because I want people to hear that phrase that you said about what leases are designed to do. Say that one more time.
Well, landlords want into your business. And if you're hugely successful, they have no mercy, and they want part of your money, and they feel that they feel as though, since they're providing you the location, that they're entitled to it. So there's different scams that they have come up with over the years. One would be a percentage of rent. So in addition to whatever you pay on your lease, they want bonus money, and they'll sign you up early on. In fact, the first one we signed had some tenant money that went to the landlord, and they'll say, "Oh, well, if you do over 1.5 million in sales, and I want, 3%, or it's this percentage rent that's over and above. That's just a bonus gravy on the top. You're wet behind the ears. They're going to throw this in the contract."
It's like mafia style.
They get, but yeah, the funny thing is that they get rights to all of your financials in the lease, because they want to make sure that you're not cheating them out of their 3% or whatever it is they've agreed to. But
Yeah, typically you see a lot of that on the food side. The food industry has a lot of that, where they get a piece, they get an override of
and alcohol sales. I know. Yeah, absolutely. Some of those big bars that they would make. I mean, I know of one where they were making 40 or 50,000 a month just in the percentage rent that they had signed into the original lease, because it was actually at Cowboys Arlington, and Cowboys Arlington was hugely successful for a long time, and that percentage rent. But that was a really easy one to track, because all the alcohol sales are documented with the state.
Yeah.
So that's a super easy one.
So you had that in yours, the Golden Diamond.
Yeah, the first one we did, we had that one in there. And, this, so after opening the second one, and when you go into redo a store, sometimes they'll give you a little bit of help, 20,000 or something for some finish out allowances,
Right,
especially if it's a white box or, new construction, but they'll give you, something. Normally it's coming, you're paying it back in the rent, somehow. But ideally, I thought this is just throwing money away. Not only the money you put in, which is a lot of times in excess of 100 or 200,000 doing a finish out for a jewelry store, like I was doing with marble floors and showcases that are built to a specific layout. Everything's custom. So signage, all of these things. So after the second store, I had come to the realization that if I were to open any more stores, there was no way I was going to do it unless there was an option to purchase or we were buying the building. So the Bedford store, when it came about, the only way I was interested in is if I could own it. So at the time, I was going through a divorce with my brother in business, and I didn't have the cash to pay for the building, but I did have the wherewithal to have an option to purchase. And it was a 5-year option to purchase. And that was huge. They were willing to sell the building at the time, but I didn't have the money. So I did put that in there, and that was huge negotiating tool at the time that paid huge dividends later.
And that is a great thing right there for all the entrepreneurs out there who are on the fence about buying their own real estate, or maybe they don't feel like they have the capital at the time to do it, or the bank won't do it, or whatever the reasoning. Get an option to buy.
Sure, absolutely.
And give yourself some time on it. Like you had 5 years. What year did you actually buy it?
So what happened was they were widening 183. The state ended up paying for the building for free.
All right, let's listen to this, because this is a cool thing. And our bank was on that same 183, and we got a ton of money as well. So the road that we were on, the state came in and wanted to widen it. And when they do that, the only way they can widen it is they take real estate land, essentially, from all the commercial business owners or real estate owners on that road. And so that's what they did. And they gave the bank a whole bunch of money. Now, we negotiated. We got lawyers, obviously, and because we didn't like the first valuation that came to us. So we got lawyers, so we got a higher price. Same thing happened with you, but you got so much money out of that, it essentially paid for the building.
I paid $412,000, I believe, for the building, and the state paid me $650. So the building was 6,000 square foot, and it was narrow, 40 foot wide and a couple 100 foot long, or 150 foot long, I believe. We cut the building in half and refaced it. So, which basically paid the whole note off and refaced the building. So the property ended up being free. Half the size, but we didn't need 6,000 square foot. In fact, the back was just all warehouse space anyway. So we ended up with a 3,000 square foot building on 183 there, paid for by the state after the taking of the land.
So, and we at the bank got the privilege to finance that for you. And this is why we say Sheldon has the Midas touch, because he buys a building for $412, puts some money in it to get it exactly the way he wants it. The state just commandeers a portion of the land. He has to cut his building by, did you say half? Cut the building in half, but they give you $600,000 for all of that. So at the end of the day, he still has the building. It's half the size, which is still all you needed, right?
Sure.
And has it for absolutely free. And the building was still worth how much at the end of that?
I would imagine the building's probably still worth about the same amount of money, maybe a little bit less because the square footage is smaller, but
yeah. So the Midas touch, but that's why we say you have the Midas touch. That's one example right there. And it just, you have other scenarios. So you what was the second piece of real estate you bought?
So the second piece of real estate was very similar to the first. Dallas Gold and Silver is a publicly traded company here in Dallas, Fort Worth. They tried to sue me for the name Gold and Silver. the industry standard name, which means buy, sell. So there was nothing legally that was wrong with the name. So after that was thrown out of court, I wanted a building across the street from Dallas Gold and Silver's main location in Dallas. I went over there, and there happened to be this cute little standalone building across the street, across I-35. And I went in and talked to the lady there. It was a travel agency, and told her I was interested in buying the building and asked if they'd sell it. She gave me her husband's name and number, and he had another business, a furniture business down the street. Went down there and talked to him. A week later, I bought the building. And it was similar to the first one. They obviously didn't even have the thing for sale and weren't really wanting to sell. But because I was going to use it, I could afford to pay top dollar for the building. And in order to make the deal happen, I also leased that building. It was an option to purchase. It was a 5-year option to purchase. But in order for me to go in, it was an ugly little building, and put in several $100,000 to bring it up to speed to.
Which you did that even when you didn't own it.
I didn't, but I would only do that if I had an option to purchase.
Yeah, so that's an important point. So when you do renovation on a building as a business owner, you spend a lot of money outfitting these buildings to get them exactly the way you want them. And in your case, you weren't going to let go of that money without the option.
Yeah, because otherwise you're just beautifying somebody else's property, which is going to give them opportunity to raise your rent, and then you don't own it. So it's not a wise decision.
Yeah, and I want to point out a couple things there too. So you already had one location, and you were going to make this building look identical to the first, right?
Correct.
So there's a lot of savings there, because you already know everything that you spent on the first one, you're ready to put it all back in on the second one. So when you go into the multiple location business, there's some economies of scale there. There's some synergies there that carry over to the next one. And so you're able to do that. And what gave you the confidence though on the second one to buy a second building and to open? Essentially, you were really going right after your competition, right? Putting a building right by theirs. What gave you that confidence to know that was going to work?
Well, in business, when you have larger businesses, there are good things and bad things that come from that. Dallas Gold and Silver would spend somewhere between $500,000 to $1 million a year in advertising. If you're spending that kind of money, you are not capable of paying for things and selling them at as low a price as I could. My business doesn't take as much to operate
as theirs.
And it's kind of like the Burger King philosophy. If McDonald's has done all the research and demographic studies and builds a restaurant on one corner, you really don't have to do a whole lot to know that the other corner is probably a good corner too. So not only could I compete with them, but I could write off some residual advertising that they're doing for the area. So that was also a huge benefit.
And you touched on that lawsuit. Your names were similar, right?
Gold and Silver.
So what was their name again?
Dallas Gold and Silver.
And what was your name?
Richardson, Frisco, Bedford, and Royal Gold and Silver.
Okay, so there's a lot of, like, when they would run those ads, there's probably a lot of confusion there when the people hear it. They hear gold and silver, and then they just, they're probably driving by and they see your store instead of theirs, and you pick up on a lot of their advertising probably just from that too, on the name confusion.
Sure. I think in advertising, in the jewelry business, a lot of times people don't know the difference. Our first store that was in Richardson, we didn't realize at the time the gravity of the location that we had chosen until after we were moving in. The jewelry exchange spent $1 million in advertising in Dallas-Fort Worth, like they do in every city. They have a store for one location.
$1 million a year?
$1 million a year.
Wow.
And that was 20 years ago. And if you would talk to the brothers, it was Golden West Diamond Corporation, the jewelry exchange, they would say they were in the advertising business, not the jewelry business, because they had 15 stores. They were spending $15 million a year in advertising. They just happened to be selling jewelry. So we opened up one block north of them on the southbound service road. Their name was the Jewelry Exchange, but all the ads they had been running for a decade said the Jewelry Exchange in Richardson, the Jewelry Exchange in Richardson. So everybody knew the Jewelry Exchange in Richardson. Well, our name was Richardson Gold and Silver Exchange. People just saw Richardson, which they had heard, which actually wasn't written in their name. We were also sued by them, coincidentally, but it was thrown out. And they saw the exchange. So the Richardson was not printed anywhere in their ad or in their name on paper. That was just said in the commercial. But our name was Richardson Gold and Silver Exchange. So, and if you just say the Jewelry Exchange or Richardson Gold and Silver Exchange, totally separate. But the point is we checkmated them on the location. We were one block north of them on the southbound service road. The only way that you could get to them was by passing us. Coincidentally, they owned the building there on 75. We opened in November. They moved by the end. They started moving before Christmas that year to Coit and Arapahoe.
Wow.
It was that hard they knew that their time was numbered.
Wow.
So I think in any business, as you get larger, Shane and I were talking about this a little earlier before we came on the air, that in business, once you have been successful and made it, that there's still challenges and things that you have to do in order to move forward and stay active and
because people will knock you off.
Yes, because all of a sudden you become the bigger fish.
Yeah, you're the king of the hill, and they want some of that.
And you have people that have been with you for a while. The salaries are higher. Your overhead is more. Everybody has insurance now. You have a manager and this and that, and you aren't as nimble and flexible as you once were. And instead of being the person that is that can be aggressive on prices and buying, all of a sudden you've become exactly the target that you were after when you started.
Yeah, and then so after you get the second store, you did the option on that one, and then you bought it again, right?
Yes.
What year did you buy it in the option? So you had another 5-year option there. What year did you buy that one? Inside
before we go to that, I just want to say that what that dynamic we were just talking about plays out over and over. If you look at Kmart with Walmart, Amazon with putting a wall. Right. So Kmart was huge. If they get complacent and think, okay, we're at the top of the game, somebody can't take us out. I mean, so those things play out in that dynamic. You can see play out in a lot of different businesses. Yeah,
and that's such a good point, Josh. You probably even see that a little bit on the photo booth side, right? Yeah. You probably see a lot more players now, and I know they're targeting you because you've done such a good job of helping create that space. And you got anything to add on that one?
Yeah, actually, it's funny because yesterday there's a lot of people selling my product now from the house and getting it. China is so accessible now. So when I see that happening, I just approach them and tell them, hey, just sell my products. Less headache for you. You can still make your margins. I'm still making a little margin, So if you can't beat them, join them.
Yeah, I love that mentality, man, because you're turning competitors into people that really are working for you.
Right. And it's easier for them. They got a finished product that they don't have to worry about logistics, and they can still make about what they were going to make doing it by themselves.
Yeah, so that's a good word for business owners listening. So not everybody's your enemy. Potentially somehow you can turn these guys into where if there's something they can't offer, you can, and you guys help each other. I did that in the banking world. I'd see these other lenders out there, and you naturally think that they're enemies of yours. But if they were with Chase, there's a lot of loans that Chase couldn't do, and I'd approach them at events or whatever and say, hey, all the small deals that you can't do, I'd love to have those, and vice versa. On the big deals that are, let's say, too big for us, I'd love to give them back to you. Even though we would always figure out a way to do the big deals.
Sure.
They at least love the story of that. And sure enough, you get a phone call from them randomly, every so often.
Yeah.
On some deals that they couldn't get done because they have this box. And so don't always see your competitors as competitors. It's good to keep them close, and it's good to figure out a way where you can work together.
Oh, absolutely. Even when Dow's Gold and Silver was across the street, at first they were upset that I came in, but I found that it was way better to have them as an ally than an enemy. So if somebody had a fake necklace, I would call over there and say, hey, just letting you know, heads up, this guy had a fake this or that. And we would work together. Now, I would still spank them, but I would say, why don't you go over there and get a price and come over, and I'll just make you $100 for driving over there. I would definitely use them to my advantage.
Yeah.
But, you don't have to, it doesn't have to be a contentious, every once in a while they legit would beat me out or overbid on something. In a scenario like that, we'll let them have it.
And I think you even put me in touch with them, because I remember having a meeting with one of the guys that was a real estate buyer or something for one of those groups.
Sure. Yeah. Yes. I think they come and looked at your building.
Yeah. Maybe that's how it was. Okay.
Yeah.
Yeah. I couldn't remember.
They were trying to creep up on me. They ended up buying the building across the street from me. They returned the favor.
Yeah. We're paying this fool back. We've had enough of him.
He covered
kicking our butts.
Yeah. Yep. True story.
Yeah. So having two locations obviously is a challenge, right? So what was the secret for you being able to manage as an owner dual locations when just in theory they're both going to take time away from you?
One of my mentors that I early on in the business would sell things to, his father owned a business, and it's across from the store in Bedford. His father had passed away. He owned 25%. And with his inheritance, I let him buy into the Bedford location. That's when we opened it. That's what kind of brought that about. At that time, they weren't sure what was going to happen to that store. It was in a strip center across the street. Coincidentally, Dow's Gold and Silver ended up buying out his mother, brother, sister, and him. But they collectively, the three of them with 75%, were able to strong arm him into selling, although he didn't want to because that was his livelihood. So he invested in my company. And I would say that is a huge reason for our success. It's hard to do our business in multiple locations without having somebody that's knowledgeable, trustworthy.
So in this case, this guy owns a portion. So one of the stores that is run by a guy who actually bought in.
But he owns everything. That he owns 10% of the company.
So the real estate and the business.
Absolutely.
And we talk about this too. Like, when you're dealing with small businesses, you got to have that guy in there day to day. That's the grinder. He's turning the lights on. He's turning the lights off. He knows everything about all the expenses. He's managing the day-to-day books. He's managing the bank accounts. And in your case, you have that with him and you trust him, and he's a partial owner. And I love that strategy where you give the guy a small ownership in a building, and this in the business. In this case, he bought in.
Yeah.
So, but I also like the mindset of if you have one location, let a guy buy in a small percentage, because that guy is going to, he's essentially going to get after it on your behalf.
Well, I think a lot of the very successful franchises, operate similar to that, whether it's Cane's or Chick-fil-A or, the franchisee is kind of a partner in the business. So
what do you think about that, JP? Letting some of your employees have ownership.
Yeah, we've tried that in the past. They just they don't know how to quantify it, because they're just looking to then how much am I getting on my next paycheck, and for them to understand like the future and the vision, uh, it's hard for them to grasp that. It sounds cool, but that's just my experience when I tried to do it.
Yeah, it's got to be people that you trust,
Yeah.
and let's say people that have been there a while. Those are the ones that you really start to, they're valuable to the company. If it's new, and maybe they got to test themselves. But the ones that have been there a long period of time, we did that on the restaurant side. The lead cook was so valuable; he was irreplaceable, and so we gave him 1% ownership. Right at the end of the day, if we ever sold it, 1% wasn't really going to matter much to us, and he was only going to get overrides on any profits.
Mm-hmm.
And when you talk about that small of a percentage, it really didn't move the needle. But
Sure.
for them, it's a game changer. For them, they invest everything they've got into the company because they're an owner now, right? So they're even staying later. They're taking more pride in what they do because they know that it's a part of who they were. So we did that on the restaurant side.
Did you approach him about that, or he?
I did. We didn't want him to leave, and we're like, "Hey, we want to offer this to you." And he was overcome by that. He loved it. He's like, "Nobody's ever done that for me," and so sometimes that can work.
Yeah, no.
But you made a good point. You can't give away too much because at the end you don't have anything yourself.
Yeah. Well, I think that what you were saying is correct. A lot of people lack a vision and the wherewithal to take something to the next level. Or sometimes that may be because they don't feel that they can, but I do believe part of what an entrepreneur is, mindset wise, is they have a vision and they believe that something can be that doesn't exist. And when you have a vision and a determination, you can only be your biggest advocate or your worst enemy. But if you are not going to accept failure as an option and you're striving forward with a vision to be successful, I believe that's a huge factor that you cannot discount. When you hire somebody, they're looking at, oh, you're giving me percentage. Well, how much is that worth tomorrow in my paycheck? They don't have a vision to say, oh, you're going to give me 5%. Well, what can I do to grow this business by double? And then I'm going to add value, and I can come to you and say, you know what? I appreciate that 5%. It really motivated me to go out and do, but the value I'm bringing to the company, I think now is worth 10%. And I know what you can do, but we can do it together. And the synergy of working together and having a vision to go forward is much different. But if they approached it from an add value and what can I do to grow it, then of course at that point they do have value, more value than they may realize, and they could renegotiate a better deal. I was talking to a friend of mine earlier this week, and he ended up owning a lot of pizza franchises. He started out in the hospitality business at a hotel. Once he grasped the concept of a franchisee and what they could make, and his focus was how to become a franchisee. A manager, he said, was making $51,000 in 1989. He said, and he was doing not even that good a job. And he said he saw room where he could improve and do a better job, but he wanted more. So his focus went to the top.
Yeah. I always say cream rises to the top. It always
Yes.
does.
So I think a lot of it is that, just having the wherewithal to realize that with hard work, especially when you're starting a business, it takes a lot of work. You have to put your nose to the grindstone. You have to fill a lot of shoes. You had to be the main buyer, the main seller, the sweeper, the carpenter. When I was building the different stores, I was the trim carpenter. I was the general contractor. If there was something I couldn't do, obviously I'd bring the people in, but I laid floor, did trim, found the location, negotiated the deal. You can't afford to have somebody to fill all those different spots. That in the perfect world, well, who's going to negotiate that? Well, you better put in the negotiating shoes. And then when the carpentry comes in, we have a diamond that's out there on 183 on the pole. I spent a couple months with two buddies building a three-dimensional diamond that's up on the 40-foot pole.
Yeah, so that was quite an undertaking. It is truly a 40-foot pole with a giant diamond on top.
10-foot diameter and 6 foot tall.
Yeah,
but. So,
and you did it yourself. It's not like you paid somebody $50,000 to come and set this up. So it was kind of your brainchild.
Right.
Yeah.
So I think that, yes, there are a lot of shoes that have to be filled. But if somebody resists being, narrow-minded and looking at just the here and now and has a vision for the future with a hope of getting there. A lot of times, my first store was financed by a venture capitalist who was 30 years old when I was 25. I went to sell him a 4-carat diamond, and he wanted to be in the jewelry business. I met him on a Monday. By that Friday, he had vowed $1 million investment on a 50-50 deal, with me putting up zero in cash. I was very fortunate to go and sell somebody a diamond and find an investor. But had I not had a vision and already had found a location, I was trying to rent it, but the landlord wanted $500,000 in cash in the bank.
Bedford location?
The Richardson location. So, but had I not had already been headed in a direction, I would not have had the same presentation to this gentleman I was just going to show a 4-carat diamond to.
Yeah.
So
the Midas touch again. There's another example, JP, right there. Sells a guy a 4-carat diamond. He goes, "Hey, how about I give you $1 million and we start a business together?" He's like, "Okay, sure."
that's what happened.
Yeah. All right. So, final words, final thoughts for the investors and business owners out there. Word of advice. Putting you on the spot.
My recommendation to anyone like graduating or going into business or going into college would be to go into whatever field of study or work that you enjoy. Find something that you enjoy doing in life and become the best that you can be at it. Find a niche or a little caveat that you can excel in, or that you could see where there's some improvement some improvement could be used. I would say focus less on the money. If you do whatever you do extremely well and make a niche for yourself, the money will follow. But if you have the money and you're doing something that you utterly disgusts you, the likelihood of having any enjoyment in life is going to be slim.
Well said. Well, thank you for being with us today. It is my pleasure. I'm so glad you did it. And as you can tell, he's a great guy to go have a beer with. We used to have these fight parties, JP, on his boat. So I would invite the top 10 list out to Sheldon's boat. 55-footer. I mean, it was sweet that you bought a great deal. Still probably worth what you paid for it.
It was worth double what I paid.
Worth double what he paid. Another Midas touch story. But interesting guy, great stories, great insight, great wisdom. Thank you again for being with us today.
A pleasure. Thanks for having me.
All right, guys. Well, thanks for tuning in. Make sure to check us out, nlmastermind.com. Rate and review the podcast. We'll see you guys next week. Take care.
See you next time, guys.